In this video I'm completing an overview of the latest trade-based money laundering risk indicators published in March 2021 by FATF and the Egmont Group. So let's get right into today's video. Hi and welcome to FinCrime Agent. I'm Marco Beranzoni and this is my YouTube channel where I'm talking about financial crime prevention and anti-money laundering related topics. The Financial Action Task Force (FATF) and the Egmont Group released a new joint report on trade-based money laundering risk indicators in March 2021. This latest report continues on the work published by the same two bodies in December 2020, outlining important trends and innovations in the trade-based money laundering area for professionals working with the financial crime and AML compliance side, transaction monitoring, intelligence and investigation unit, the client onboarding team, and of course also for relationship managers. In this new report you will find some practical examples with risk indicators created at the back of a set of sampling data from researches completed by both FATF and the Egmont Group. In the paper they split those risk indicators into four main categories which we will review in just a minute. Those are aimed to further support professionals working in the AML and financial crime prevention space with the identification of suspicious activity potentially connected to international trade. Let's now bring up some slides to review those four categories and drill down more on the red flags under each of those categories. The first category outlined is the structural risk indicators. In this category you will find 12 red flags, some of which are risk indicators related to the legal structure of companies, the country of registration, the business footprint, or even exposure to jurisdictions with weak anti-money laundering regulations. The second one is trade activity risk indicators. 7 key red flags are reported under this category. The focus of these red flags is around the actual trade transactions executed by the parties involved. Some of those risk indicators, for example, expand on the complexity of the transactions, the shipping routes, the profit margins connected to the trade, or any misalignment between company sector and the goods that are traded. The third category is the trade document and commodity risk indicators. Under this category, 9 risk indicators are specified in the report. The red flags are aimed to support clearly the identification of inconsistent documentations which can hide trade-based money laundering activities. Some examples of those risk indicators include possible contradictions in the name of the parties involved in the trade, invoice with vague descriptions, for example, a contract for complex trade appearing unusually simple, or perhaps a significant mismatch between the volume of the trade with its value. The fourth category included this account and transaction activity risk indicator. Also under this category, 9 risk indicators are specified in the report. The risk indicator takes into account how the trading parties manage their accounts with the aim to spot suspicious activities correlated to trade-based money laundering. Some examples of those risk indicators include last-minute change to payment arrangements for the transaction, cash transaction just below the reporting threshold, round amount payments, or payment routed in a circle ending back in the country of origination. So those are the 4 categories now indicated in the 2021 FATF and Egmont Group report focused on trade-based money laundering risk indicators. If you are a professional working in the trade finance area or financial crime prevention, you should know that much more work has been done in the past by both FATF and Egmont Group to reduce the TBML risks. Beside this report, there are other important papers for you to read, and some of those include the Trade-Based Money Laundering Trends and Developments, which was published in 2020, the Trade-Based Money Laundering Typologies, published in 2012, Best Practice on Trade-Based Money Laundering, published in 2008, and Trade-Based Money Laundering, which I think was the first actual paper on TBML from FATF, published in 2006. As always, I will leave in the description of my video all the links to those reports. And with that, I am at the end of today's video. I hope the information that I've shared are useful, and if you have enjoyed my video, remember to subscribe to FinCrime Agent and press the bell so you can get notified as soon as new videos are going live on my channel. Remember to check the description of this video for links and references, including the guidance that we have discussed today, and in the description you will also find the patreon.com page in case you want to support my project FinCrime Agent and become part of my Patreon community. So thank you for watching, I hope this was useful, and until next time, see you soon.